Now, aside from the vote in Japan, there's another pretty big election we're counting down to. The US presidential election is just 8 days away, with the two candidates still battling it out on the campaign trail in what looks like a very tight race. Investors are paying close attention to the US dollar. Now, our next guest says many signs point to further strength in the currency if the former president, Donald Trump, wins another term in the White House. Let's get more from Jameel Ahmad, Chief Analyst at GTC. Thank you for joining me, Emil, and thank you for waking up early. Now, you've said that a Trump presidency could lead the US dollar to appreciate. What would that mean for the global economy?
Well, we're already seeing some signs of that dollar appreciation being priced into the market, because if you look at the past month, the dollar index is up nearly 4%. That's a significant move, and that's taken the dollar from 100 to 1.045 as of time of this interview. In terms of the impact on the global economy, we have to take into account what Make America Great Again version 2 might mean for global markets. Given the last presidency, yes, we had uncertainty. However, to be fair, despite how controversial and some of the unpredictability of that administration, it was fantastic for US financial markets, also fantastic for the US currency. And I would expect those types of trends to continue or remain in place if he does win. With that said, we also have to take into account that if Kamala Harris is victorious, and the opinion polls do appear to be neck and neck, although the better markets are very clear that one candidate is leading, then I would expect for that dollar weakness to start resuming back into the market, and for financial market investors to be focusing on trends such as central bank policy, inflation. But the unknown is that the previous president, who appears to be the leading candidate according to the better markets, and how much uncertainty that might bring and what that might mean for world markets overall.
Yeah, you mentioned the central bank, and of course all this coincides with the Fed's November meeting, the market expecting further cuts this year. How do you think this will play out?
Well, we have to take into account that it was 1 year ago, Katie, that the Federal Reserve, the US Central Bank, did start preparing financial markets for lower interest rate policy. But the Fed did not move until last month in September. Financial markets still expect up to another 0.5%. That's 50 basis points of moves between now and the end of the year. And although the US economic data is still strong, if you look at the most recent monthly jobs reports and the retail sales, do not forget that consumer spending is the major driver of the US economic GDP growth. But the reason why US interest rates were raised to the largest extent we've seen in a generation was because of inflation. Over the past 2 years, inflation's come down from an annualized level of 10% to as low as 2.4%, which is just above the 2% central bank target. The Fed's going to want to provide confidence that it is winning that battle, and that's why the Fed is more likely than not going to continue to cut interest rates over the coming months.
Neil, just briefly before I let you go, because we've only got a minute on program, can I ask you about, turning back to our top story, Japan? We've seen the yen depreciate this morning. Briefly, what do you think is coming up for the yen?
Yeah, the Japanese yen over the past month has gone all the way from 143 to as high as 153. That's 1,000 pips and a massive move for financial markets. Given the uncertainty that's likely to continue in Japan, we're likely to see more Japanese yen weakness, which is going to alert the Bank of Japan, who have been very concerned about Japanese yen currency weakness throughout this year anyway.
Okay, Jameel Ahmad, thank you for joining me from Dubai, waking up nice and early for us there, and fascinating insights. As you say, it's something we're going to be watching and talking about a lot on this program. In the next 8 days is all we have left to the US elections. Much focus on both candidates' economic policies, what it could mean for the US dollar, what it could mean for the economy in the US, as well as the global economy. Plenty to discuss, lots more to get into, but do stay with BBC News.